Hey traders, Nick Shaheen here, looking at Coles, but not specifically for the stock itself, but rather for the concept of selling puts or put spreads for income. All right, so recently Coles reported earnings and the stock fell off a cliff, and I shared a trade which was basically going along Coles but with other people's money. What do I mean by that? Okay, so when it fell hard, this is a daily chart, so that one drop was considerable from 64 to 60, whatever it was. And the idea was, okay, so what level am I comfortable owning the shares themselves? And that's really the basic underlying idea of selling puts. It's basically committing myself to owning the shares at X% below current price. I'm not particularly fond of retail in general, but Kohl's comes and goes as far as price, and it has been consolidating for a while. I just zoomed in a little bit, so this is 2018 basically. It broke out and has technically used up the support line like a rubber band. I don't usually look at hard lines in the sand, but this was the area from which it broke out, and then used it as support several times. And here they didn't even come close to it. So whether I wanted to go along with buying the shares, I would have made money. Whether I would have gone buying calls or call spreads, I would have made money. But what about going along without any money out of pocket? Or if I wanted to buy calls, how about I finance them with somebody else's money? And that's what I did. I shared the idea of selling puts, and I chose October puts at somewhere around there. Not somewhere around there, at $50. What does that mean? It means that on that day, I wrote contracts. I became a market maker, tiny speck of dust market maker that said, hey, anybody wants to sell their Kohl's stock if it hits 50, I'm a buyer. And for that, I'm basically selling somebody a put to where if the stock goes to zero, I'm a buyer at 50. And for that, I collected the $1.55 per contract. So I took risk, and for that I was rewarded by holding premium. Another way to think about it is I sold somebody a lottery ticket. If somebody does not own the stock and they're not buying protection, they think that Kohl's is going to 50, therefore they want to buy that put to profit from it, right? And I said, I do homework, and I said, you know what, at $50 a share, that was a big breakout line from back here. I'm an owner, so at that point, that was what, roughly another 17-18% dip from the price where it was at. So I was comfortable with that. So I sold it, the put, and I collected $1.55. So if I did 10, I'm on the hook. Every contract is 100 shares, so keep that in mind. I only do this if I am able and willing to own the shares at 50. So in the long term, I'm very comfortable owning shares at 50. I figure I can manage out of them for little or no damage, or if not even a profit from there. My break-even point is even lower than 50 because I collected $1.55. So it's $1.55 less 50. That was my break-even point. So 48 and change. It can fall there and I still break even. So without a market crash, that can happen. I can lose a lot of money, but so can everybody else and anything else in the market. So this is a black swan. You can't, if you're afraid of trading anytime black swan, then I'm out of the market completely. So the idea of selling puts to generate income, if I'm not looking to own the shares, then I would do a credit put spread. So there was probably a $2.50 wide spread I can sell, or $5. Depends on the ticker. Some carry $1.50. So, and also some people cannot take the risk, open-ended risk. They're not allowed to sell naked puts in their accounts. That's fine. There are other ways you can do it. Credit put spread would be one. It's a place where I collect the premium just like the $1.55, but much smaller, because I sell a put to open the risk, and then I buy a put lower to limit the risk. Whereas if I sold a put at 50, I'm open from 50 to 0. If I sell a put at 50 and buy one at 45, then now I'm only suffering from 50 to 45, and then somebody else is on the hook below that. Whoever sold me that 45. So that's the idea of credit put spreads versus naked puts. Now, anytime I open a credit spread, or I sell a put, or I sell a call or call spread, I never sell calls naked, by the way, or a call spread, I'm opening risk, so money goes into my account. It's cash into my account, but it's not mine until the bet is off or expires. I want it to expire worthless. That would be in my favor, which means if I sold it for $1.60, $1.55, now this is real life number, it's almost 60 cents to buy back. So I can say, you know what, that bet, forget about it, I'm closing it, I'm buying it back, and I pay back 60 cents or 65 cents, and I keep the 90 cents or $1 for round number, easy math, as profit. So if I did 10, I made $1,000 with no money out of pocket. All I needed to do is say, you know what, this is overdone. I'm willing to buy it down here. Thank you for the money. That's how I did that in Kohl's. Now, here's another stock that everybody's baffled. Now, somewhere along the line here, maybe here, I can't remember exactly when, somebody came out and said, this stock is going to 35. That's down here. Okay, that's a, let's see, one year chart, down to 35. Possible, but not for a stock that had a PE of 5, a trailing PE of 5 already, and they wanted it to fall another $10, $15 from that on a base of 40, 50, whatever it was. That sounded like insanity to me. So I sold puts at 40 for $2 in that area, and now they're last week on the spike to here, which suddenly another analyst loved it and the market loved it. I can buy them back for I think I bought a bunch back at 60 cents, maybe 55 cents, I don't know. But so from $2, so $1.50 in profit, just because I was willing to buy it at 40. So I do homework. It's not willy-nilly. Not every drop is catchable, so to speak. But this is an easy way to catch a falling knife for somebody that knows what they're doing. Options are dangerous, and I don't take a trade I don't understand. So if I kind of heard this from somebody, I don't just do it. I ask questions about it. Speaking of questions, if you have any, you can direct them to me at sellspreads@gmail.com. Sellspreads@gmail.com. Nick signing out.